Welcome everyone to today's lesson. Today we will dive deep into most powerful trading approach used by professional traders and institutions called smart money concepts. In this teaching, you'll be able to understand what smart money concepts are like, and you will master this. You will stop trading like the crowd and start thinking like the big banks and hedge funds. So, what is smart money concept? Smart money refers to big player, institutional investors, bank, hedge funds who actually move the market. Retail trader like most beginners follow, but smart money create the major moves in the market. So today I will be talking and teaching you on how to master smart money because our goal as a trader is simple: to follow the smart money, not to fight them because they pass us. We guys follow them, react with them where they are going. So, number one core principle about smart money concept, you need to understand what is market structure, liquidity pools, order block, manipulation and inducements. Inducement. So you need to understand these concepts. So you need to understand market structure, liquidity pools, order block, manipulation and inducement. If you check my previous video, I have made a video on this market structure. You need to master your market structure, but I'll still just briefly explain it. When market is making series of higher highs, higher low, higher high, higher low, higher high, higher low, higher high. This is for the uptrend market structure. Then the downtrend for market structure is when market is making lower low, lower high, lower low, lower high, lower low. This is for the downtrend, and we talk about the ranging market where markets are making equal highs and low. We'll be having something like, let me use this too, having something like this support, and you can also use this one as resistance. So this is about the market structure aspect of it. Then when we talk about the liquidity pools are those highs and low where people are likely to place their order, like this high highs and lows. This major highs and low is a liquidity pool. Then order block. When talking about order block, let me draw something. Order block is a zone responsible to break a structure. Let me draw something like that. We have this our market structure. This zone you check here. This zone that break this structure now. Let me use this too. This zone that break this high you are seeing here. This zone that break this high are responsible of breaking this high. You check whether there is other block there. I will still show you how to know other block. Alright, like this break of structure, let's use real life to show you example of other block. This break of structure now, you bring out this to see other block. This red candle before this impulsive move that break a structure. Let me zoom it to it so you can see it with real chart. It's you can see it with real charts. You can see this red candle. This is other block before this big move occurred. So this is other direct candle before this break of structure. This is other block. This is other block. So you need to know your other block. You still need to know your imbalance. Let me see whether I can find imbalance on this chart. Okay, we have imbalance here. Imbalance is comprises of three candles. Let me zoom out this chart now. Imbalance is comprised of three candles. You can see one, two, three. The imbalance here is you can see here. You can see the mark out the candle lows and high. You can see one, two, three. You can see there is a space here. This is imbalance. So concept of imbalance means market is likely to come and tap this zone. It means that sellers didn't catch up in the market that occur here. We have this push that market is likely to react to come and take orders from this imbalance before starts to make another push. So we have talked about the market structure. We have talked about the order block. We have also talked about the imbalance. So let me tell you something about the manipulation or inducement. Let me use this part. So let's say market do like this, break a structure, came down, do something like this. A lot of trader would have entered for a buy, but market will come down and sweep these people now. These people were down took by most of retail traders and tap into these zones and went up now. Let me make it more easy for you on this structure. We have this break of structure, and when you see a break of structure, go and check if there are imbalance in that break of structure. The origin that caused that break of structure, just map the origin out. Then here now will serve as a liquidity. Here now is a liquidity. You can see as markets reacted. Some trader would have entered by, they will now sweep their liquidity, tap into this other block and take a move and go and sweep this highs. Now there is a buy side liquidity. Then this is for the buy side liquidity. So when you're trading smart money, you have to trade smart. That's why they call it smart money. You don't have to follow the cloud. You think like them, follow them and make your money. So you react, don't predict, you react and also be disciplined and patient to wait for your setup. So in smart money, your POI, mean point of interest, where you are going to execute, where you are going to shoot down your sniper, is your fair value gap or your other block. So let me give you example of the sell side liquidity. When we have a scenario like this, market came like this, go up, came down again, do like this, like you want to continue down. Now, most retail traders have entered for a sell and put their stop loss here. Market will first go up, tap into the other block and break another structure. So here now we are having stuff like we have a break of structure to the downside. Once you see a break of structure, so you need to master your market structure well if you want to be good in smart money. Then mark that origin that caused that break of structure. Allow price to come to that origin again. This zone now can serve as a liquidity. Let me use test. I normally use this. Okay, text. Let me call here the liquidity pool. The liquidity pool. So when price do something like this, a lot of retail traders have put the sell position here. You see markets go tap into their buy, tap into breaking their stop loss and enter. Even here now, if you're not smart money, you will still start thinking of buy. Market will still come down and sweep this. Here now is a liquidity again. So smart money, you're able to be knowing where liquidity people place their order and trade like the big boys, like the big banks. So now this is the sell side liquidity, sell side liquidity. Or let me just put it sell side. So I don't want this video to be long. I believe you learned something from this video. Then if you want to register for our academy, you can send us a DM and register and learn more of this. You can learn more of this. This is just an insight given to you. But when you register in our academy, you will learn this thing more well, to more clear and understandable to you. So subscribe to my YouTube channel for more video like this.